Hey, what's up, everybody? This is Chef again, and we're making a weekly watch list today. So let's uh, let's check out some tickers. And I know it's gonna be a very short week. We have 4 days of trading, day trading, swing trading, scalp trading, whatever it is that you do. 4 days to make the decision if you're gonna buy some shares of all these stocks that are on sale and just another week of opportunity is basically what I'm saying is that there's different forms of opportunities for you guys to invest, whether it's up or down. And since you guys are option traders, well, some of you are, hopefully, most of you guys are, you guys have the ability and the capability, the tools and the knowledge to play both sides of the market, whether it goes up or down. You can play both sides and still make money, right? You can invest in start buying some shares, and you don't have to worry about making money the next 2 to 3 days, but worry about making money in the next like year or two, right? Or even short term, the next 3 months, whatever the case may be. But every day is a new opportunity for you to take advantage of and appreciate what you have. It's just like the holiday that we're supposed to be celebrating today. It's the Martin Luther King Jr.'s birthday, and just in celebration of who he is and what he did for us. And if you guys don't know who he is, I suggest you go do some research on who he is and what he did for us, and show some appreciation as to the freedom that you now have. But again, I'm not here to tell you guys to go celebrate something you don't believe in, or maybe whatever it is. Just know that every day is an opportunity, and you guys have the freedom and the capability to be good, be great, and be better than you were yesterday. All right, so motivate yourselves. But anyways, let's kick off some weekly watch list levels here, and thought process on some of these things in the next 4 days, right? So normally, when we have a short week, we usually have retail crew coming in, and what I mean by that is that a lot of the patterns like to play out, right? So, for example, if you see a little bull flag, if you see a ascending triangle, a descending triangle, a channel down, a pennant, whatever. I don't care what you post out there or call out or identify as a pattern. It's more than likely going to play out this week. Okay, that's normally how it is, because on holidays, a lot of the big money likes to go and enjoy the weekend, and their weekends extend all the way for like the rest of the week, and they just come in every now and then and just start buying some things or start selling some things, whatever the case may be. And usually those days are like in between, like sometimes around lunchtime, around power hour. On Fridays, they come in and just start buying things, so you don't get a lot of big money coming in on a consistent basis. It's kind of like what I'm pointing out, and the retail crew is here on a consistent basis, so a lot of the patterns like to play out. Sometimes if something is bearish, it's definitely just going to stay bearish. If something is bullish, it'll stay bullish until you get those aggressive pullbacks. And those stocks that come trending down aggressively end up getting bought up, like on Fridays and things like that. So just the mindset is a little more different, and you just got to be a little more cautious around these times. And also keep in mind that we do have earnings coming up, financials, airlines, and then right into next month on the 2nd, I believe, is like the beginning of tech stocks. A lot of the FANG stocks as well are going to be reporting earnings. So usually these first couple of weeks for earnings, it gets a little chaotic, a little volatile. You see some indecision movements, you see some aggressive selling, some aggressive buying, and vice versa. You get some sell off into earnings, some run up into earnings, and you get all kinds of stuff. So like I said, there's opportunity every single day, and it's up to you as a trader to make sure that you're taking full advantage of whatever's going to be in front of you, whatever's handed to you. You have the tools right in front of you to do that. Yeah, you just got to be motivated and be willing to invest into something that you strongly believe in. So, anyways, here we have /yes. You guys will know it's the S&P 500. This is one of the main features that I like to watch, and you guys always see this on my watch list. It's the first thing that pops up, and it's the only levels that I truly give you. to be able to play the market up or down, right? So I would just want to point out a few things: the supply and demand. The demand here, as you can see, it's always just been wicks. All right, so I'm gonna give you some characteristics as to supply and demand here. The structure for candle bodies is not a lot. Okay, the difference here with the candle bodies, look at all these candle bodies that are closing up inside at supply and right below as well. So there's more structure on the supply side than there is on the demand, right? I mean, I would love to see, a few candles down here, just to kind of build structure and build demand in order for us to continue back up, to give us some type of foundation, a solid ground to hold on to, that we can say, hey, the market is at a valid support. I want to start buying, right? In this case, what we see is we actually see the opposites, is that we do have more candle bodies, building structure with supply, meaning that nobody's trying to buy on the break above. Like, if it does go up, look, we only barely went up. We tried to make an all-time high at this 4808.25, and then we just came crashing on down, right? And not to say that crashing like this market is going to reverse or anything, but just to show you that not everybody's buying right above. So how do you approach a market like this that nobody's buying at these levels? Well, first of all, you start building a position down on the bottom, start looking for opportunities in the market where something may have potential to reverse. Okay, in this case, we want to look at this doji here from the previous week, and we're heading into this new candle that's being formed. As you can see right now, it's just red, no crazy volume. Everybody's like having the day off, and everybody will be back later tonight and then tomorrow morning. By then we should get some type of direction, and the next 4 days should give us a nice candle. And I'm gonna keep it very simple, because we have a doji here with this previous red candle. We never went above and held above 50% of this previous move. So meaning that the bears are still in control of this previous movement. Short term, of course, I'm not saying that this is going to continue down and we're going to come to 45 and then everybody's saying it's going to come down to like 43 and yada yada yada, right? But what I do want you to see is how simple this trading week is going to be based on direction. You use this doji candle. Once we go above that 46.71, all right? I think that's the top, all right? We go above this doji, we're bullish into the market. Very simple. We start breaking below, we're bearish. As you can see right now, we're bearish, right? So yes, most of you may say, well, we are moving a little sideways in the futures. Well, that's good, all right? I'm letting you know that that is good. The more range that we move, the better it is, and the more structure we build. So break above, look for the levels up top. Break below, look for the levels down, right? Your first target is going to be that wick, okay? These are your targets. You guys can see I already have my little purple boxes there. So when I open up my chart, I know that exactly where we're going to go, right? The way you want to picture this is that wick, that can give us a nice red candle, or it can give us a nice green one, whichever one it may be. And it doesn't even have to close super green, or it doesn't have to close super red. It's just going to be the candle body that's going to be formed for the week of the 4 days that we have left in this week of trading, right? So that's what I'm going to look for. Once we're below this level, I'm leaning bearish. Once we're right above, I'm leaning bullish. It's very, very simple here on /ES, and just the market and the market sentiment in general. It's very well balanced all across the board. If you guys have seen the market's moving, oil's moving, energy's moving. Some of the FANG stocks, tech, is pulling back. Some of the financials ran up into earnings, and now they're just awaiting the earnings reports, with some of the industrials that are moving up as well. Things like BA, CAT, anything, a lot of stocks in the Dow Jones are basically pulling up as well, while some of them are trying to move up a little bit. And then we have the retail, which are things like Costco, against Target. Some of these stocks are, pulling back just a bit because they've had some amazing runs, okay? These things have been running, and it's almost like they're just nonstop, and we're finally seeing a red candle. Look at this nice gap down and just straight red. So high probability that retail just keeps on dropping down just a bit more into earnings while we sit back and wait for tech to do its thing, right? So again, it's going to be the same explanation with tech here with NQ. This nice little doji right here, kind of like what I explained on ES. The break above that candle body, we're leaning a little bullish. The break below, we're leaning a bit bearish, and the targets are way down here. And the targets, of course, you just trail it. I think every like 150 points for NQ. For the QQQ, every like $2 to $3, you want to trail your position on the way up. So the sentiment is going to come across the market, and some of the things that I want you guys to realize is that Apple, Amazon, Microsoft, Netflix, Facebook, all those are going to be able to move the NQ because they're big names, along with Google as well. So just keep eyes on those guys. That they're at great spots still, and there's still opportunity for those to drop just a bit more. But you guys well know that this market just experienced some crazy COVID volatility when it dropped, and we experienced some heavy selling down here. But then the recovery has just been amazing because of tech. Tech is one of the strongest sectors. It's kind of been the backbone of the market, if that's what you want to call it. That's just how I see it, how I view it. In my opinion, it's been the backbone of this market, and it's been holding up very well. That brings up a lot of attention for a lot of investors and a lot of retail traders and things like that. And also remember that the previous video we talked about, we did say that there was a lot more people buying and getting into the markets like they've never have before, thanks to COVID. You know, kind of sucks to say that, but there's a lot more people now investing. So now there's more money coming into the markets in general. So that's why you see a lot of bigger movements now. You see volatility taking control, and you guys see these like $10 movements, and some of you guys think it's like the craziest thing. But when I was trading, I remember that SPY used to gap up like 50 cents overnight, and we would be like the happiest people alive because we were swinging calls or something. Some of you OGs already know, if you guys are watching these videos, you know, it would gap up 50 cents, like I said, and it was like everything was like super bullish. But that was before the tariffs, that was before the COVID, and before all this volatility with the feds and all that stuff. So some of you who are new, find yourselves blessed enough to feel these gap ups and gap downs of like $5 to $10, and it's amazing, right? But that's just how long I've been trading, and it's been kind of a great journey for myself, right? So that's going to be part of NQ. The other one with RTY, I want to make sure you guys have a clear understanding of what may potentially happen here. Something that I said earlier is that as long as it goes range, it's okay. All right, you guys see this huge range, right? Look at the date right here. Okay, 12/28. I just want to point that out. So basically, from the beginning of the year, 1/4. Okay, this is the weekly candle right here, this green one. Okay, this one right here. This is the beginning of the year, and then look what we did. All the way to December, and then now we're at the beginning of the year again. So technically, for a full year, RTY has been trading sideways. All right, most of you guys will call this chop. Some of you will say it has no direction. Some of you guys will say, well, I don't want to trade this because it's going sideways. But again, look how many times you could have made so much money. If you would have bought here, if you would have bought here, here, I mean, do I really got to point out every single wick? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13. 13 times. Imagine if you bought the dip that many times on IWM. Look how many times you would have made money. Vice versa. From the top, you count each candle on the top and you buy puts. How much money could you have made all the way to the downside? Okay. So the opportunity is always there. It's just a matter of fact is, are you going to trade this? Are you going to put your money on the line to buy this last dip right here and then stop out right there for the reward of being way up here? That's totally on you. Call it what you want to call it. see it in a negative way that it has no direction and this and that, but you're missing out on a great amount of opportunity that could make you tons of money. Okay. Look at this. Look how many times you could have made money, and look how many times we have bounced from this previous level. All right. Just giving you guys some perspective as what you could and can be doing, while some of you, say that the market is choppy, that uh, there's no day trades out there, there's no swing trades. But look, this is right in front of you, and I guarantee that most of you have not taken full advantage of these potential swing trades and day trades that you could have on a consistent basis. Why? Because the range is consistent. Because it's consistent, it hasn't broken out yet. At one point, we tried to break out right here, and I was able to swing trade that for that whole week, and get as many day trades as I could until I got stopped out on this one. So follow the trend until it's not. That's exactly what I did. What did I do here? Same thing. I bought that dip, and I got a little green. I bought it again that same day. I started flushing, and I got out. So I took a loss, but look how much green I ended up taking. And then it's the same thing every time it comes down here. I'm always looking for calls. Why? Because I know that this is a support. I know that this is consistent. When there is a pattern that's consistent, why not follow it? There's opportunity here right in front of you, and you're not taking advantage. All right. What are you waiting for? All right. That's my question. What are you waiting for? All right. How scared are you to buy this dip right here that has continuously bounced? Okay. If somebody out there were to tell you every single day that a particular stock was always at support and it always bounced there, and it happened every day, and that person made money on a consistent basis, and he posted pictures of a Lamborghini, and posted pictures of like all his profits, because every time it came down to that, that 21 and the 2140 level, he always bought. Wouldn't you want to follow that same path? I mean, it makes sense, right? But again, if it doesn't make sense, then by all means, I guess you're the one that's probably not taking advantage of this opportunity that's right in front of you. So anyways, I want to show you the support that's here, and I'll let you guys do your own due diligence on RTY in the next 4 days. All right. Be aware that if it does break to the downside, it can be very, very, very bearish, and you'll see a crazy candle do something like this. Okay. Vice versa, if this thing breaks to the above, you'll see a great candle do that. All right. So I'm gonna leave that there for you guys. You guys go do some homework on RTY and understand that it's at a support. All right. That's all I can tell you. I don't know what else to do or try to explain to you, but it's at a support. Okay. Don't know what else to say about that one. So yeah, let's get into some tickers, right? So some of these tickers that I want to look at for this week, it's ARK. Okay, ARK is one of the ones that have a bunch of growth stocks, and a lot of the growth stocks, this sector in particular, Kathy Woods, a lot of her portfolio is down. Like it's almost like she bought the tops all across the board, and now she's over here hurting because everything's like at a 52-week low. So if you look at Roku, you look at ZM, you look at TDOC, all these other tickers that she ended up buying, SQ, they're at like these 52-week lows, guys. And if that's not a concern, but also if it's not on your watch list, then it should, because it has a lot of opportunity to go back up. A lot of the times when you see a stock go 52-week lows, the question is why? Not also why, but it's also like a major alert for you to keep eyes on it, because of the reversal can be great. Imagine if you caught that 52-week low and you started trading it all the way back up to its 52-week previous downfall. So you're talking about like a 52% return from its previous high, right? So you're basically looking for a straight V-shaped recovery, and you're making money all the way back up. This is your opportunity to find something that has many, many red candles and start looking for reversals, right? I'm not telling you that this is going to be the bottom. I'm not calling the bottom. I'm just giving you guys an example as to what has potential to drive in this market, because they're growth stocks, okay? So there's a lot of shift change happening in the market in general. So looking at these growth stocks now have a lot of potential to the top side. The one thing about ARC for me is I'm not gonna go long until this stays above 80, which is at 80 right now. I'm gonna go on this 4 hour real quick and just show you. And like I said, we have a 4 day trading week, but I want to enter here around 80. Okay, if it doesn't go Monday, but it goes Tuesday, I'll get in Tuesday. If it doesn't go in Monday or Tuesday, and it decides to go, Wednesday, Thursday, Friday. I mean, I'm like lost in days, but anyways, you guys get the point. If it doesn't go here tomorrow, Tuesday, then I'll get it Wednesday. If it doesn't go Wednesday, I'll go Thursday. If it doesn't go on Thursday, then I'll grab it Friday. I just want to make sure that we stay above 80, and 80 is going to be my entry point. And I have a target of like 86. Okay, so this 86, 86, 50, 87 area, as high as is 88. So all I'm doing is I want to catch the slight reversal and above 80. Okay, very simple trade. So make sure you get some time on your contracts, or just simply day trade it all the way up. Okay, nothing too crazy about that. PayPal, everybody knows about PayPal. We've been talking about PayPal. It's in this accumulation phase, and on Friday it actually broke to the downside, and I was able to play some puts on this because I had these levels right here, and I had a target of 175, and I don't know, I didn't take as much profits as I potentially could, but either way, I still got some profit. So over 180, guys, I really do think that we're going to reclaim this demand. If it does that, if it can't go above 180 this week, there's a high probability that we'll stay downtrending for PayPal. Over 180, I'm looking for calls all the way to the top. All right. So once this stays above 180, I'm in a swing trade instantly. There's no denying this this type of trade, because it did make a lower low. It broke below the demand. So if it can reclaim demand over 180, I am long all the way to 195. If I got to trail it, make sure I stay green. That's exactly what I'm going to do for PayPal. Okay. One of the first targets you should have is like around 185 to 186. From there, you want to look for 190. And then that's when you look for 194, 195, 197, and so forth, right? Either way, be ready. If it does reject, it'll just come down here and probably go lower. SQ is another one that we've kind of been following. Last time I ended up taking a swing. I took some small profits here and then ended up taking a loss on the swing trade. But either way, I'm still taking advantage of all these candles that I see go green, and able to day trade and scalp in between. It's just a great risk to reward stock. I mean, kind of like what I said, right? You're at 289, but then you drop down to 129. All right, rounded off 130. Imagine catching the reversal all the way to the top from 130 all the way to this like 290. That's a huge return, right? So I don't know, think about it. If the value is there, what's stopping you from following this trend and keeping it on your watch list on a consistent basis? There shouldn't be anything stopping you other than all that red, right? Just be wise when you're trading this. All right, you get in, make sure you trail and keep on trailing it. Every dollar, every $1.50, every $2, you want to make sure you keep profits and stay in profit, and don't think that just because it's low, it's going to reverse in the next 2 days and you bag hold a call position, and then you get you bag hold it, you go red, and next thing you know, you're like, oh, I'm gonna give it one more day. I'm gonna give it one more day. It's gonna bounce here, and then it doesn't even bounce. It just keeps on dipping, and at that point, the dip keeps on dipping, and you're bag holding a call position, wondering if you should stop out when you should have stopped out two supports ago, right? So be careful when you're trading stuff like this, but also know that the risk is very low versus the reward being very, very high. Okay, so SQ, I think over 140, if it can just reclaim this little small base where there was like a little structure here, 140 to 145, I think it's a great buy area. Other than that, I'm going to be waiting till we get up there. So I do have my levels here, some alerts down here, way up here to catch the reversals, so I do not miss it. If you guys don't have this many alerts like I do, it's because you really don't care about the reversal to the top side. Twitter, it's going to be on my next list for this week. I think I want to honestly just buy it on Monday. I mean, sorry, Tuesday. Keep forgetting it's a 4-day week. But I'm going to use this trend line as a magnet, all right? And but what I mean by that is that usually when stocks are breaking down and we have a trend line, they tend to come back up and retest the trend line. Okay, very simple explanation. I can go in more depth on that later on, but that's kind of the explanation. So I want to buy it over this green candle, 38.50. 38.50, I'm gonna have 39, 39.50, 40, 40.50, 41. I'm gonna trail it every 50 cents. Twitter's not a big mover unless it gets some crazy news and it just starts rocketing to the sky, then I'll be in it. But at that point, either way, no matter what happens, I will trail it every 50 cents. Snap, same scenario. See the rejection? The rejection. I want to see a retest of that trend line, whether we have a solid green week or not. I did take a call right at the close above 38. My contract's only like 1% red, which I'm not even scared about or worried about. But yeah, I want to enter just at the 38 level. This is my entry right here over the green candle body. And I'm just going to trail it all the way up. It's very simple. As long as we can get some buyers in, get some good volume in the market, and as long as we have some green futures, the sentiment is good, decent, I will hold my position. Otherwise, my stop loss for my swing trade is going to be that low of day, just because it's going to keep on dropping. But just know that if it goes above 38 again in the next 3 days or even next week, I'm gonna get back in. I'm not going to hesitate to get back in on these levels that I'm posting here. Okay. Lift. So maybe y'all wondering why I'm posting this one, because it broke pattern, right? So here's your supply, nice zone of supply and nice demand level, right? So the structure here is pretty nice on the demand. And this one, I just want you to keep alerts on that. If we can stay above 43, then I will enter and then take profit around 45 for a swing trade, right? My stop loss, if I enter at 43, it's at 42.50. Very simple. If you want to get entry at 42.50 and then stop out right below, give yourself like, 20, 30 cents, by all means. But I feel more confident getting into an entry above 43 just so I can take profit around 45, right? It doesn't have to happen this week, but like I said, definitely if we have a nice green market, that's kind of what I'm looking for lift, all right? You guys notice that all my tickers are red candles? I hope so, because I'm looking for reversals, guys. I like the reward to the top side, okay? So looking for Etsy to have some base build up here, or continue down, whatever the case may be. But I plan on entering Etsy here. Okay, so 163 to 164.50 area, right? Yeah, or just the whole number 165. I plan on entering here, and I want to be able to take profit around here, so about 175. That's kind of my target for the week. That's it. If it wants to keep on driving over 175, I have alerts to let me know about 180 and then 185, 186, 187 area. So again, guys, I'm giving you guys stickers that have been beaten down so much, and I'm looking for those slight reversals. I'm looking for buyers to come into the market in some of these stocks that have been beaten down from the 52-week lows. They're 52-week lows now, or they're just breaking some like major supports, and I'm looking for those slight reversals. I'm not saying that this is going to be the bottom on a lot of these stocks, but I'm definitely looking for some green candles in the next few trading sessions. If not, just keep on trading the downside. Use the same levels as break below and follow the trend, right? Amazon. I think everybody's waiting on Amazon, guys. I think I should do a whole video on just Amazon alone, because everybody is just waiting, okay? They say patience pays, so if you can keep on waiting, just keep on waiting, right? So the last position I took on Amazon actually was a success. I ended up getting around this 32 area, ended up selling right there, just a little bit higher, and it ended up just keep on going. So it never hit my target. Okay, so time to delete that. And I want to give you guys 3 levels here that you can trade Amazon on, all right? All right, so 3180, 3240. All right, just a psychological 3240 and 3280. All right, those three numbers, break above, break below, either one, use it as your entry points for Amazon. All right, very simple. I know you guys want to hear Tesla. Tesla has earnings coming up in the next week. So whether we do a run up or a run down into earnings, or we trade sideways. All right. There's three things here that's going on. There's no specific pattern on Tesla, and unless you guys can make one up, then that's cool. But there's no specific pattern. My recommendation with Tesla is watch the IV. The IV is going to increase as we get closer to earnings, and the contracts are going to be boosted up. So if you guys are bullish on Tesla, my recommendation is to get in at a cheap price and going out the money. Why? Because the IV will increase and it will increase the value of your contract. Two, if you want to gamble, by all means, that's your money. That's whatever you decide to do with it. If you agree that it's going to come down, grab some out the money contracts, and find a target. So my suggestion for lottos would be up here, would be your first target. And then for the downtrend would be this. Those would be my first two targets for Tesla if I was bullish or bearish going into earnings, whether the downside or the top side. So very simple here. You just got to choose a direction that you please, whether you're a bear or a bull. That's totally on you. You decide that. All right. I'm not here to decide that for you, but just to give you some targets. And like I said, this thing, honestly, this thing almost looks like a weird Head and Shoulders. Yeah, weird Head and Shoulders already played out. So if this rejects the 1050, most likely we're going to come back down to the 1K. If we stay above 1050, look for 11. Well, very simple. Right there. So use 1050 as your entry above or below. Okay. Broke it down for you just right there. Somebody's out there going to post Head and Shoulders on this. Microsoft. I like Microsoft right here at these price points that it's at. So I'm going to give you two entry levels right here. Okay, 311. And then right here, 306.50. All right, why? Because we have a nice base here. So all I'm doing is grabbing the top and bottom and using that to guide me for direction. Break above, we're bullish. Break below, we're bearish into earnings. All right, there's a lot of stickers out there that are going to have earnings, guys. So I just recommend that you be wise moving forward. Starbucks. This thing stopped me out about 2 to 3 times already. I did, however, take some slight profits, but still red on the position. Starbucks, I have my alert right here at this 97. And this is where I'm going to buy. If this thing continues to drop into next week, I am going to buy a position to go long, just because it's a high volume and it's a little small demand that hasn't been tested right here. So around 97 to 96, I'm looking for a straight buy. All right. So just remember that. That's kind of what I'm looking for this week. Other than that, it's still downtrending. So just play puts. But if it goes above 102 area and 104, I will be looking for long plays. So very simple. So yeah, those are some of the tickers, guys. I hope you guys had a great weekend. I hope you guys have an amazing week as well the next 4 days. Remember, it's more of a retail week. There's not a lot of economical things happening this week other than like some unemployment stuff, but there's, as we know right now, there's nothing here that's going to move the market like in a crazy way, unless something happens during the week where some news articles comes in, or we're going to war, or rates are going up higher and things like that. So pay attention to the news. There's a lot of stuff that's volatility and creating a lot of crazy movements in the market. So number one, manage your risk. Number two, don't enter anything that's going to make you emotional. Number three, don't chase. Don't get hyped up on anything. If you're growing 20%, take your 20% and run. Go hide, run for the hills. just know that you're building some type of consistency. All right. So yeah, trade safe, guys. Be wise, and don't oversize any position if you can't handle it on an emotional basis, please. All right. Trading is like 99.9% psychology. The rest is extra. All right. So I'll leave you guys with that. Enjoy the weekend, guys, and I hope to see you guys in the next video. All right. Y'all stay green and see you soon.